Hey guys, how are you? My name is Ronan, and I do the recruiting for a trucking company here based in Concord, Ontario. I wanted to do a quick video about pay structures. So I wanted to do a quick video about payroll versus the Driver Inc. model. So I think the Driver Inc. model has been really popular over the last few years, and I'll go into some of the advantages and disadvantages of a Driver Inc. model. So the Driver Inc. model, so basically what drivers do is they open up a corporation. So I, as a person, open up a corporation and I start funneling the money from the trucking company that I work for. So if I work as a company driver at a trucking company, they pay me as a corporation. So there's really a lot of advantages to this. So number one is you save a ton of money on taxes. So you're not paying your CPP, EU, EI based on your gross. They are giving you the transaction tax-free into your corporation. So it's a service rendered from a driver from one corporation to another. And what you can do is basically you can pay taxes only on the salary that you take out for yourself. So if I'm working for my corporation and I'm grossing $80,000, I don't have to take this full $80,000 out. I can just take 40 or whatever it is that I need for myself. So let's say I only live off of $40,000, I could take a $40,000 salary, only pay taxes on that 40 and leave another 40 into my corporation. So the taxes are a lot lower on a corporation than it is on personal. Another thing that I can do with my corporation is I can expense a lot of my personal expenses. So my personal expenses like a cell phone, like my, some fuel for my car, transportation, all that I can write off my corporation. I limit my liability. So a great thing is that you limit your liability through a corporation. So that's the Driver Inc. model. So it's great that you get to save a lot of money. So the advantages of payroll, there's not really a lot of advantages on payroll except the fact that you're doing everything 100% right. Trucking companies or truck drivers, if you don't own your own truck, you are supposed to, by law, get paid under as a payroll. So the company is supposed to pay on your behalf, and you are supposed to pay 30 or 40% of your salary, depending on what bracket you're in. You need to pay the CPP, EU, EI, and the corporation that you're working for, the trucking company that you work for, they also need to pay on your behalf. So what's happening? So over the last few years, Revenue Canada has they see that the drivers are more going into the Driver Inc. Models. So they're seeing that they're losing millions and millions and millions of dollars. So what they've done as of recent in late 2018, they're coming up with new rules, or they've come up with new rules. And they're actually cracking down on Driver Inc. models. So if you're classified under a PSB, which all truck drivers that do not own their own trucks are classified under a PSB. A PSB is a personal business service. So a Driver Inc. model is a PSB. They're saying that this is a loophole and a tax manipulation, which it is. They want to force trucking companies to provide T4A slips. So what is a T4A slip? A T4A slip is just like a T4, but it's a T4A. Okay? So basically a trucking company will need to declare the gross earnings that a PSW, so a personal business service, they need to declare how much money they've made. So they're understanding that this is costing the Canadian government millions and millions of dollars, and therefore they're coming up with all these new rules on how to crack down on Driver Inc. Okay, so yes, they found it as a loophole. Yes, it's a tax manipulation, and they're going to be more and more strict about this. So not only are they going to be going after the trucking companies, but the trucking companies really don't have much to, all they have to do is supply the T4As. The people that are really going to hurt from this, and they're going to come after and do back charges on you, are the drivers that are under this Driver Inc. model, which is the personal business service, PSB. So question, I guess everybody asks me, how do you go around it, or how do you not get, there's thousands of drivers out there that are under this Driver Inc. model. So the only recommendation that I have to get away from this is to find yourself a company that has really good, a well-known lease purchase program. So if you are on a lease purchase program, there's a lot of companies that offer it. If you're on a lease purchase program, nobody will be able to come up to you and say you're on a Driver Inc. model, because the lease purchase program allows you to have a corporation. You do have, and you're making payments for a truck, and you can prove that through your monthly or semi-monthly payments. You are paying for your own fuel, so the second they dive into your pay every month, your fuel is different. You have some expenses, and nobody will be able to classify you as a PSB if you're under a lease purchase program. So I will make in the future another video on earnings for a company driver versus a lease purchase operator, maybe taking 3 or 4 different companies. So if you like my video, just give it a thumbs up. If you'd like to share it, it'd be great. Let other drivers know, especially that are in Canada, about the Driver Inc. model and how they're cracking down on it.